I'm here today with Keith Miller from ETC Tax, and we're going to be talking about a subject that has fascinated the Accountants Mastermind community, and that is VAT on Brexit. Say hello, Keith.
Hello.
Hello, Keith, and I can't wait to get started. So without further ado, and with the usual virtual round of applause, take it away, Keith Miller.
Thank you very much. Okay, so good morning, everybody. Welcome to this presentation about VAT and Brexit. Just bear in 1 second while I put my slides up. Okay. Hopefully you can all see those. Right, okay. VAT and Brexit. An interesting topic, I'm sure, for a lot of people. We were just talking about this before. I think one of the reasons why it's of interest to so many people is that a lot of it's new. Obviously, we anticipated a number of changes since 2016, when the original vote to leave the EU arose. It seems a long time ago now, and obviously lots happened since then. And one thing to bear in mind when we go through the various aspects that I'm going to talk about is that we still haven't seen everything yet, because a lot of the changes haven't been fully implemented as yet. So there's going to be a lot of change still, even after this year. There's obviously been so many changes this year. So without any further ado, what I'll do, I'll just go over the contents of the presentation. Initially, I'm just going to talk about the most obvious change, which is the reintroduction of customs borders between the UK and the EU. Then talk about EORI, the requirements for obtaining one of those if you trade with the EU, either trading import or export. Options for deferring the payment of import VAT and customs duty that wouldn't have been payable prior to Brexit. I'm also going to talk about one of the key changes that I know many of my clients have experienced, which is the removal of the triangulation simplification for British companies. Also, we're going to look at the VAT rules for low value consignments, that are consignments imports into the UK up to £135, and imports into the EU up to €150. There are new rules that have arisen this year on both of those, and we'll go through those as well. We'll also look at the impact that Brexit's had on retail sales into the EU and into Britain as well. Also, I mean, everything up to this point, I guess, has been looking at goods, but also there's been an significant impact on the supply of services between the EU and the UK as well. So we're going to look at cross-border services, and in particular the rules now in relation to the supply of electronic services by British businesses. So that's the content, really. So there's quite a lot to get through. I'll be going through them at a relatively high level. If I was to go into all of these areas in any detail, we'd be here all day, which is something I don't think any of us really wants. But if anyone's got any questions, as Simon said, as we go through, please put your questions in the Q&A section, and we can see if we can deal with those specific questions as we go along. Okay, so the starting point, I guess, of all of this is that, you know, going back to, I remember actually in 1993, I know I don't look old enough, but I was already doing VAT then, and I remember the introduction of the single market in 1993. Prior to then, I was doing that for a few years, and we had customs borders between the UK and the EU then, but they all went in 1993 when the single market came in, which meant there was one single effectively trading bloc, including the UK and all the other EU countries. So the movement of goods was free movement of goods effectively between any of those countries, and that's something we've become used to for a long time now, of course, since the early 90s. So that's the single biggest impact, I guess, that Brexit has caused. So from the 1st of January this year, the customs borders went back up. So that means theoretically, the movement of goods across any border from the UK to the EU now has to be cleared, where it didn't before. So, you know, that's a massive change, of course. So, excuse me, my slide doesn't appear to be working. Sorry, apologies for that. Okay, that's better. Sorry. It's probably not my slide. It's me that's probably not working properly. Yeah, so when the reason for this is we left the single market as part of leaving the EU. We left the EU single market and the customs union on the 1st of January 2021. So no more free movement of goods with the EU. All goods crossing the border will potentially be subject to customs clearance, which means import VAT and customs duty will theoretically be payable in most cases. If you remember back to last December, when it was left till the 11th hour, of course, until they actually signed the agreement, and it was trumpeted as a tariff-free agreement. In other words, there'll be no tariffs, no duties on the movement of goods between the EU and the UK. Now, that's true to an extent, but there are certain conditions that need to be met before goods can be moved across a UK-EU border without duty. And that primarily relates to the origin of the goods. So in simple terms, if the goods originate in the UK or the EU, then the tariff-free, the duty-free treatment is likely to apply. If the goods originate from outside the EU, UK, then duty will apply. So it was slightly misleading in reality, the headlines at the time, because even though there is scope for duty-free movement, it's not always a given. And the point to take on board here is that the rule of origin requirements that determine whether duty is payable or not are quite complex. There are some simplifications that have been introduced. So certain goods, if it's under 500 euros, then the rule of origins don't apply, and they'll be exempt from the customs duty anyway. The threshold is 1,200 euros if it's goods imported in personal luggage. So it depends on the value of the transaction, the consignment as well. So with the higher the value of the consignment, the more stringent the rules. So especially consignments that are valued over 6,000 euros. Okay, so that's sort of the basic starting point. Now, one requirement that probably now, we're in November now, aren't we? So one would imagine that most businesses that are trading with the EU would have recognized this requirement by now. So if you're a UK business who wants to trade goods with other EU countries, not other EU, I have to stop saying other EU countries, we're no longer in the EU, who are looking to trade with EU countries, needs an economic operator registration identification number, an EORI. So a lot of UK businesses will already have one, because they would have needed it to trade with non-EU countries prior to Brexit. So those businesses would already be in a position to fulfil this requirement. However, businesses who only trade with EU countries would probably not have had one of these. So that's a requirement as well. So that's a requirement for importing goods into the UK. You need an UK EORI. If you importing goods into the EU as the importer, you will need an EU EORI. So a UK EORI will not be sufficient if you want to be treated as an importer into the EU. We'll go on in a while the situation where that might arise. And also, a UK EORI will also be required if moving goods into Northern Ireland. Northern Ireland has a special status at the moment, which is still, as I'm sure you're all aware, is top of the agenda in terms of sorting out the Brexit deal. So it's got a strange status in the sense that it's still part of the UK, but it's also still part of the EU for a VAT and customs duty perspective. So the rules around Northern Ireland are particularly complex. So if anyone's got any questions on Northern Ireland, that's probably something we can take offline, because it's very fact specific and the rules are quite different from the rules that apply to sort of mainland UK. Excuse me. And as it says at the bottom there, that's the point I made already. You'll need an EU EORI number, a separate, different number issued by the EU if you want to make a customs declaration in an EU country. Now, I've added this slide to the presentation because there's been a lot of talk about whether, if a UK business is now required to register in the EU for VAT purposes, whether they need a fiscal representative, which is effectively is a legal representative in that country to file the application for them, or whether they can do it directly. Now, there's been a lot of discussion around this, and it's still not been settled at all, because, of course, prior to Brexit, prior to the 1st of January this year, if any UK business had to register for VAT in any EU country, there was no need to appoint a fiscal representative under the rules that applied across the member states of the EU. And because we are no longer an EU member state, those rules no longer apply. So there's been a lot of discussion as whether EU member states will require UK businesses to have one or not. So as I said, it wasn't a requirement, but we now understand that most larger EU countries, for example, like Germany, France, Italy, Spain, Poland, have indicated that there will not be necessary, although there are some of the smaller countries that indicated it may be. So if you have a client or you're liable to register for VAT in an EU country, there is no standard rule about whether a representative is required. You'll need to check on a country by country basis, but most of the larger countries do not require it. So moving to the impact on UK businesses buying goods from EU suppliers. So prior to Brexit, this was, of course, a relatively straightforward process. There was no customs clearance required. All of the entries were simply entries that had to be declared after the event on your VAT return or through Intrastat declarations, etc. So it was relatively straightforward. Obviously now, and also the important thing there, I guess there was no import VAT or customs duty to pay on clearance of goods, which there is theoretically now on certain goods. Import VAT on most goods, and customs duty on some goods, of course, as I mentioned before. So in recognition of this fact, this is one of the, I think, to be fair to Revenue and Customs, they recognise that this is going to be one of the perhaps biggest impacts on business, the fact that they will now actually have to pay VAT and duty when trading with the EU and vice versa. So customs deferment arrangements were introduced, of course, from the 1st of January for those businesses who are having to pay for them. And they initially, I think, announced that these were going to be in place for 6 months, but they've been extended now to the end of this year, and maybe they're going to be extended further. So in terms of when we're talking about deferment here, this is not necessarily deferment of payment, but the deferment of making full customs declarations. So normally customs declarations have to be made at the time that the import's is carried out. So the deferment we're talking about here is to ease the changes in for UK businesses trading with the EU. Those declarations do not have to be submitted at the time of the customs clearance, apart from certain goods. Controlled goods are not allowed to be, the clearance processes in relation to those can't be deferred, but excise goods included in that. But for most goods that we're talking about, for most businesses, the goods are eligible for deferment. So as I said there, it was originally planned for 6 months, but it's been extended, and we wait to see whether it's going to be extended further. So in terms of the payment, to ease this even further, what Revenue Customs said, they brought in what was called postponed accounting, which effectively is the same as the system that was in the acquisition VAT system that was in prior to Brexit. So if you buy goods from the EU, this relates to the VAT only, of course. Rather than having to pay VAT to clear the goods, you declare it on your VAT return. As that you sort of effectively self-declare the import VAT. And if, as a business, you can recover any VAT you incur, you can also recover it at the same rate, so it's neutral. And that's what's called postponed accounting. It's effectively the same as acquisition VAT accounting that we had before. So that's one of the biggest changes, and easements to make life a lot easier. That doesn't apply to customs duty, of course, which, of course, when that's payable, that's not recoverable. It's not a recoverable cost like VAT is. So where customs duty is payable, that's going to be an additional cost to the business as well. So again, that's quite an important change. One of the impacts that we're seeing is in relation to triangulation, where I've got a few clients I mentioned, I think before, that where prior to Brexit, they traded with EU partners. Maybe they had an EU customer, let's say France, and they sourced their goods from, say, Germany. So what would happen would be that they arranged for the goods to be shipped directly from the supplier in Germany to the customer in France. And that was not a problem at all, because under the triangulation arrangements, which meant as long as all three countries involved, i.e. the supplier in Germany, the customer in France, and the intermediary, effectively, supplier in the UK, our client, if all three were in the EU, then there'd be no need for the intermediary supplier, our client in the UK, to register in either Germany or France in that example. They would just simply get the French customer's VAT number, they would provide their UK VAT number to the German supplier, and everyone would be happy, and the goods would be accounted for, the VAT on the goods effectively be accounted for by the French customer at the end of the chain. So no problem there. Now we can't do that, because as the UK intermediary, we're no longer in the EU. So what one of the key rules about triangulation is all three countries must be in the EU for it to work. So now that same transaction, our UK client would be liable to register for VAT either in Germany or France. So that's an issue that we're having to work around at the moment. I was reading something interesting last night, actually. There's a call for the rules to be changed to enable non-EU intermediaries in situations such as this to still be able to use the triangulation. And it wouldn't be a huge change, I don't think. So we're going to have to watch this space on in relation to this. So if anybody's got any clients who do that, or trade within, we're talking about triangulation here, but also it would still apply if you had a supplier and a customer in Germany or France in the same country. That's something that you would have to look at in terms of the requirement for EU registration at the moment. Like I say, there's talk about potential changes to introduce simplifications for non-EU suppliers such as UK suppliers, but at the moment there aren't any. So there will be a requirement to register in the EU in these sort of situations. Okay. So sort of moving on now to, I mean, what we've been talking about so far is just general rules that apply to any movements across border. One of the changes that has arisen this year is in relation to low value consignments of consumer sales we're talking here, so retail sales of low value goods. So a little bit of history. So goods imported into the UK that were valued at £15 or less prior to the 1st of January this year were VAT and duty free. So low value imports from outside the UK could come in with no VAT or duty. Now, this isn't necessarily a Brexit change, but it just so happened to come in on the 1st of January this year. And what happened was Revenue and Customs got rid of that rule, the low value rule that we had before, and replaced it with a new rule, which meant that the £15 rule is no longer. Now we have a rule where retail consignments that are valued no more than £135 are no longer to customs duty. So they've raised the threshold for customs duty-free goods. However, VAT is payable on all of the goods. So there's no longer a VAT-free threshold. So VAT's payable on all retail sales into the UK from outside the UK. And the way it works is that the retailer or the seller, the non-UK seller, has to charge an account to Revenue and Customs in the UK for VAT on all of those supplies, where the value of the consignment that they're shipping into the UK is £135 or less. So this is a huge change for anybody selling, any retailers selling low value goods from outside the UK. And we've noticed actually quite a number of non-UK retailers, including EU retailers, have stopped selling into the UK because of this. I mean, I was online not so long ago looking to buy some stuff for my son from an online site in Germany. It's skateboard stuff, actually. I went on to look at some of the stuff on their website, and there was a notice saying apologising to UK customers that they will be no longer selling to UK customers. And they're not on their own. I think there's quite a lot doing it, and vice versa as well. I think there's quite a lot of UK businesses who, for similar reasons, which I'll go on to in a minute, there's a very similar rule that's been introduced in the EU, who have just simply decided to stop selling into the EU. So another example of a significant impact that Brexit, that changes that have happened either because or around Brexit have resulted from. So yeah, so overseas non-UK suppliers will now have to register for VAT in the UK and pay VAT on low value sales to consumers in the UK. Business to business, the same, the normal rules will apply. So it'll be just a normal import. So this is only applicable to consumer sales, so retail sales to private individuals who are not acquiring the goods for business purposes. And the same for anything over £135. This only applies to low value. Anything over £135, normal rules will apply. Okay, so let's have a look at the sort of corresponding rules, effectively, that apply to the selling of retail goods in the EU. So, of course, prior to the 1st of January, any retail sales from the UK to EU consumers would still, because of the single market, would be classed as a domestic sale. So what would happen is you would still charge, the UK retailer would still charge 20% VAT, whether they sold to a UK customer or a French customer or a German customer. These are B2C sales, of course, only. And what we had then was distance selling rules, which meant if the volume of sales in any particular country exceeded a certain threshold, €100,000 was quite a common threshold, then you would have to, the UK seller would have to register for VAT in that country and charge local VAT on those sales. That was to stop large companies just basically picking a low VAT jurisdiction to sell from. So if you went over a certain threshold, you had to effectively account for VAT in the destination country. That only applied to EU sellers, of course, and of course, since 1st of January, we're no longer in the EU, so UK suppliers can no longer benefit from being able to charge UK VAT on sales to EU customers. So that changed from the 1st of January. So some UK suppliers, because of this, were actually registered for VAT in a number of EU countries because of this. Because of those rules, because of the rules change, they've had to cancel those registrations. So it's good news for some, because they would have. There is now a new process in place that enables UK companies to account for sales to customers in the EU under one single sort of EU-wide VAT return, effectively. So between the 1st of January and the 30th of June this year, there was a transitional period where UK suppliers could just send goods to EU consumers, but the EU consumer would have to effectively pay any VAT or duty to clear the goods. In a similar way, I'm sure we've all experienced where we buy goods from outside the EU before they've been delivered, and we've had to pay VAT, import VAT and duty before we could actually pick up the goods from the post office. So this is a similar thing that happens now between the UK and the EU, because somebody has to pay the VAT and duty. But since the 1st of the final point there, yeah, so we could use a distance selling threshold. So this changed.
Keith,
sorry,
just before you move on, we've got a couple of questions, if we may,
yeah, sure.
on the previous slide. David's asked, and you may have answered this after David answered the question, because all of this is going way over my head. I must admit. So, but I'll ask the question to just make sure that we've covered it, or we can answer it. So,
sure.
David's asked, business to business, UK to EU. If you declare the customer the importer, does this avoid the need to register for VAT in the EU?
Yes, it does.
Excellent, brilliant. That was a really
for business to business,
there.
it's So if the customer's the importer, I mean, somebody. This point I made before. Somebody now has to pay the import VAT and duty. A UK supplier could choose, if they want to make life easy for all their customers, they could choose to register in any or all EU countries if they wanted to. Obviously, a massive compliance burden. But if it's business to business, most businesses are used to paying import VAT. If they're used to trading out, forget Brexit, go back to before Brexit, and businesses buy stuff from outside the EU all the time and pay import VAT and duty and what have you. So it's not a new concept at all. Obviously, it's new in terms of trading with the EU, but yes, indeed, if the customer acts as importer, then they would be responsible for paying any VAT and duty. So there'd be no liability to register. They would have to be registered for VAT, I guess, in their country to make that work. But most will be, I guess.
Okay, thank you. And then Ashley's asked if she could have a copy of the slides, as they're very good. Okay, can we have a copy of the slides?
Yeah, absolutely.
Yeah, brilliant. Yeah. All right, I'll make sure that
now I've managed to work out how to use them. Then no problem.
So I'll make a note, Ashley, and we'll make sure they come out on the email. Ashley says thank you very much. So okay thank you. Worries. I'll let you continue, Keith.
Okay, thanks, Simon. Okay. Okay, yeah. So these rules, it can get a bit confusing in a sense, because there are two sets of rules, one that came in the 1st of January and one came in from the 1st of July. So it's probably best looking at where we are now. We're past the July date now, so everything's changed. So that there was a transitional period for 6 months, but now there's a unified approach effectively in the UK and the EU. So there were no distance selling thresholds at all now across the EU. So the notion of distance selling has now gone. It's no more. So every seller into a EU into EU consumers, whether they are the suppliers in the EU or outside the EU, such as the UK, now has to register for VAT in the EU. Now the question is, they would have to technically register for VAT. If you sold to customers in every EU country, you would technically have to register for VAT in every EU country to enable to account for VAT on those transactions. However, what's been introduced in the EU is what's called a one-stop shop. So it's effectively a simplified EU-wide VAT return that enables any supplier to EU consumers to account for all EU sales on a single VAT return. You have to declare these country by country and at the specific VAT rate in that country, but you only have to do it on a single return. So you only have to register for VAT in one EU country effectively. So rather than all of them. So that's a blessing at least. So that applies to EU suppliers as well as non-EU suppliers now. That's the change that came in January. So it doesn't matter where the goods are shipped from now, it's where the consumer is, where the VAT rate that's applied. So the EU have been looking to apply this rule for years now. So this change would have come in if it wasn't for Brexit anyway. So even though, a lot of these things I'm talking about today have just coincided with Brexit, so they would have happened anyway, even if we'd stayed in the EU. So now the reality is any consumer sales to EU customers will be liable to VAT in the customer's country. Simple as that. So yeah, for non-EU suppliers, such as UK suppliers, a very similar scheme called the import one-stop shop is in place now. And it's very similar to the £135 threshold that I talked about before that the UK brought in the 1st of January for sellers selling from outside the UK into the UK. So the threshold here is €150. So any consignments valued no more than €150, which is quite a lot of retail consignments, as you can imagine, will have to be accounted for under the one-stop shop scheme, the import one-stop shop, which means that UK businesses selling into the EU will have to register in at least one EU country to be able to submit this EU-wide VAT return and account for VAT in the country in which their customers belong. So again, it's an extra compliance burden because this wasn't required for UK retailers unless they went over the distance selling thresholds that we used to have, which we no longer have now.
Keith, I've got another question, and you may have answered this, but from Philip. Philip's asked, business to consumer into the EU. Does the business have to register for VAT or import one-stop shop, or is it optional?
They have to register for VAT. The one-stop shop's optional. They have a choice. Okay. Yeah, and some of the larger businesses will probably choose not to use the one-stop shop. They will probably choose to register in multiple countries because that will enable them to recover costs that they incur in those countries as well. Whereas a one-stop shop is simply a mechanism to pay VAT over to the EU on sales made to EU consumers. So it's not mandatory to use it, but most businesses will use it because it's a simplification. It means there's only one VAT return instead of VAT returns in multiple jurisdictions. In terms of having the customer pay the VAT and duty, well, there is no duty, but there is VAT on the consignment. You can't choose to have the customer pay it if it's up to €150. If it's over €150, the normal rules will apply anyway. It's not a voluntary thing. You can't treat the transactions how you used to treat them. So you have to, the non-EU supplier supplying goods valued at less than €150 will have to register for VAT in the EU.
Okay, so if the package is under £135, you've got three choices basically. The customer pays you do a one-stop shop, or you register.
You can't have the customer pay now.
You can't have it. So, Philip, in answer to your question, you can't have the customer that pays. So, Philip said that he's asked 2 different VAT people that question, and they've given him different answers around.
Yeah, that's weird. I think what's happening at the moment, I think a lot of the confusion at the moment, I think, is because the rules haven't been implemented fully. So what's happening as well at the moment is packages are being sent, and some are going through without anything being paid. I know that I know it's sort of an anecdotal, and I'm sort of loath to sort of rely on anecdotal evidence, because for the reasons we just said, you get all sorts of different stories. But it does seem to be the case that so far, the implementation of the new rules haven't been as robust as they might have been, shall we say.
It's sort of horse and bolted and all that sort of stuff comes to mind. But anyway, so
it may well be the case. Having said that, it may well be the case that consignments under 150 euros are being sent aren't being accounted for properly, and maybe at the other end, the customer has been paying the VAT to the postal service and then paying them over that way as a means of actually getting it done, because rather than relying on suppliers to register for VAT, that's the other issue that's interesting, how easy it is for European tax authorities to police the non-UK suppliers, non-EU suppliers as well. So time will tell to see how that bears out.
Brilliant, thank you. And then Neil's asked, UK businesses export low consignment goods sold online from the UK to customers based in the EU. No international one-stop shop currently in place. Does VAT registrations need to be in place for the goods to pass customs?
Theoretically, yes, because you'll need a code. When you register, you'll get a unique code. And theoretically, this part of the same point we've been talking about. Theoretically, that code is needed for those goods to be cleared. To show, effectively, it shows that VAT's paid. It's like a VAT paid code. And it's saying, well, this is our number, this is our registration number, this is our unique code. This proves that it doesn't prove it, the VAT's been paid, but it's basically declaring that we will pay the VAT on this consignment. So there's no VAT therefore to be paid by the consumer. Without that, it shouldn't be cleared. However, like I said, we're hearing quite a lot. Things are being cleared. So
brilliant. Yeah. That's all I've got at the moment. Thank you, Keith.
Okay, fine. Thank you. Yeah. So going back to I think we've done this slide, haven't we? So yeah, now from the 1st of July, everything's unified, and everything under 150 euros has to be accounted for by the supplier. Anything above that, as we were just saying before, the normal rules can apply, and the customer can take responsibility for paying the VAT and duty and also any duty that's payable. Okay, yeah, that's the final bullet point that I was just mentioning. Normal rules apply if it's over 150 euros. Okay, another victim of Brexit was the retail export scheme. I don't know how many people were aware that prior to the 1st of January, any visitors to the UK from outside the EU, tourists, we're talking about mainly, I guess, if they bought goods in the UK and took them home with them, like, for presents or mementos or whatever, they could recover the VAT they paid in the UK once they provided evidence that they'd taken the goods back. So effectively, what would happen? They'd complete a form through customs, and they would pay the VAT up front, effectively, to the retailer. They do all the documentation. It gets stamped at customs to show when they went home that it had been exported. They'll send the documentation back to the UK retailer, who would then, armed with that evidence, enable a VAT refund. So they'd refund them the VAT. So because the goods have been exported. Now, because we were leaving the EU, there was a lot of talk about, okay, the retail export scheme now needs to be extended to cover visitors from the EU, because we're no longer in the single market. So we'll have to look at this, won't we? Because we'll have to charge UK VAT. So we'll need to extend that and make sure that we do that. So Revenue Customs reviewed it, and rather than extended it to the EU, they decided to ditch the whole thing. So rather than give EU visitors benefits of VAT-free purchases, they decided to say no, and also now deny it for visitors from elsewhere around the world. So well done, Revenue and Customs, on that. So I'm not quite sure why they decided that, but that's one of the another negative impact. So far we've just talked about goods. Now I think in reality, the supply of goods has been the main victim of Brexit changes. Excuse me. But we also need to recognise that the treatment of services, especially cross-border services, has changed in certain cases because of Brexit. So as it says there, the changes aren't quite as severe as those related to supply of goods, but they are some. So one of the main changes is that B2C services provided to EU customers by UK suppliers that were subject to VAT prior to the 1st of January are now outside the scope of VAT. So I said I've put many B2C services, professional services, for example. I mean, we've seen this. So we as a tax advisory firm, we've got clients in the EU, private individuals who we provide tax advice to. So prior to Brexit, we charged 20% VAT on our services under the rules that applied across the EU. But now we don't have to charge them VAT at all, because they're outside the UK and the rules have changed and we're no longer in the EU. So that's one of the changes that we've seen. And also one of the changes that's arisen is certain business-to-business services cross-border from the UK to the EU and vice versa that would have been outside the scope of VAT before Brexit are now within the scope of VAT. And this is because this concept of use and enjoyment. So even though the rules for business-to-business services, the basic rule is that that transaction is subject to VAT where the customer belongs. So under the new rules, what we would say, if we had a UK supplier and a Spanish customer, you would expect that transaction to be subject to Spanish VAT, and the Spanish customer would typically account for VAT under the reverse charge. They'd effectively self-charge the VAT on their Spanish VAT return and recover it. If they were a business that could normally recover VAT charges, they would recover it and it would be neutral. So we had an example of this recently, actually. I mentioned UK and Spain as an example because this is a real live case. It was a skip hire. We had a client who's a UK skip hire business. They've been supplying this Spanish client for a while, so pre-Brexit and post-Brexit. And Revenue Customs came along and had a look, and they had a bit of a dispute about the VAT treatment. And what's happened is, before Brexit, what happened, they had a Spanish customer who hired skips in London, and there was no supply use and enjoyment rule before Brexit. So the place of supply was Spain, where the customer belonged. And because there was no use and enjoyment rule, which means the use and enjoyment rule means actually we can override the basic rule if those services are actually used and enjoyed in another country, that's where the VAT's due. And this only applies to certain supplies of services. The hire of goods is one of them. Telecommunication services like mobile phone services, anything like that, they would come under the use and enjoyment rules as well. So now, because we've got the use and enjoyment rule, because the skips are actually used in London, in the UK, the client has to charge UK VAT to the Spanish customer. So again, there are certain nuances to the changes in the rules because of Brexit that make a difference to certain service providers. The biggest change probably for services are those businesses who supply electronic services. I've put there the VAT position regarding the supply of services is probably going to evolve, one would imagine. There'll be more changes as time goes on. But one of the biggest changes is that businesses who in the UK, I don't know how many people are aware that prior to Brexit, any UK supplier who supplied electronic services, and when we say electronic services, it's covered quite a wide range of services. So if you supplied material that was accessible on your website to consumers, or you made things available to download from your website and charge for those, I've got a few clients who I advised recently. One's a professional drummer who provides online content and online lessons. We've got tuition companies who provide similar. I've got an artist who basically, because of COVID and lockdown, has moved online. So there's more and more businesses, I think, who are moving online. And a lot of the time, if it's pre-recorded or pre-prepared material that's accessible online, they will qualify typically as a provider of electronic services. So it's a much wider scope than one might imagine. Prior to Brexit, even though EU VAT was chargeable and accountable, UK businesses could do it through revenue and customs. So they wouldn't have to register VAT at all in the EU. They would do it through their UK VAT return, like a supplementary EU VAT declaration with their UK VAT return. So it was an extra compliance burden, of course, but it wasn't that difficult because it was all handled through revenue and customs. Now, of course, we're no longer and we could do that because we were part of the EU, I should mention. And what happened was that the UK would distribute the EU VAT to the various EU countries, and there was a reciprocal arrangement where EU suppliers were supplying electronic services into UK consumers, and likewise. So there was a reciprocal arrangement where all the EU member states collected VAT on behalf of the other EU member states, and they had like a clearance system, effectively, I guess. Now, because we're no longer in the EU, of course, that's gone. So we can't. So UK suppliers supplying electronic services, and by the way, there is no threshold for supplying to having to account for VAT on electronic services to EU consumers. So theoretically, whatever the level of turnover, you should register for. You should have to account for EU VAT. So because we're no longer in the EU, UK suppliers still have to account for EU VAT, but they have no mechanism for doing so in the UK anymore. So they will have to register for that in the EU. So what we're seeing, this is probably the one area that I've done more work on than any other that's as a result of Brexit this year. So all these smaller businesses you might not expect it to be caught by EU VAT registration requirements are having to register in the EU to be able to fill in. They've got a similar system, so it's like a one-stop shop registration. So it's an EU-wide VAT return. So they don't have to register in multiple countries. They only have to choose one. And islands are quite a popular choice for I guess for obvious reasons. So we're seeing that. So if you've got any businesses who supply things online, not selling online. So one thing to bear in mind here, if you're selling goods online through your website, that's not the same thing. What we're talking about here is goods that are downloaded from websites, so accessible through websites and the like. I think I've just given it away there. I think that was the end of my presentation. I just went to my final slide. So I think, so as I said before, sorry, Simon, if I could just sort of wrap up. Have you got some further questions?
I have, yeah. But if you wrap up, and then Mark can put the contact details in the chat box, and then I'll just finish off with the few questions that I've got. That'd be great.
Okay, yeah, I was just about to say. So that's, there are lots of other aspects, of course, to Brexit, and from a VAT and customs duty perspective. So I hope I've gone over most areas that people would want to know about today, but obviously there are a lot more maybe, and I could go into a lot more detail in some of these areas as well. So as Simon just said then, I think they're going to, Simon was going to distribute my contact details. If anyone's got any questions, obviously we're going to have a little Q&A session now, I think, but if you've got any other questions or you want anything clarified, just please feel free to contact me, and I'll hopefully be able to answer those questions for you.
Brilliant. Thank you, Keith. And Mark has popped those contact details in the chat box, so you just cut and paste them and take them away. And as Keith said, we've got about 9 minutes left, so if you've got any other questions, just pop them in the Q&A box and I will gladly answer them. I've got some questions, Keith. First one from Neil. So business to consumer, B2C, low consignment EU VAT may be falling through the net. If the international one-stop shop is not in place or VAT registrations in place in the EU country, that's what we said, wasn't it?
Yeah. Broadly speaking, that's from, it's anecdotal, of course, but I've heard it from a number of sources that because it normally arises when I'm asking clients or perhaps people I've been introduced to, how they've coped so far. And it's quite a few saying, "Well, all right, really," because
not done anything.
Nothing gets sent back, and I'm not had any complaints, But they're typically people who've not got huge volumes, perhaps. But then on the other hand, I've had the opposite, where things are getting stopped, things are getting sent back, So, and this is where I say, well, it's probably best that you actually do. You need to get a registration in place, to make sure this doesn't keep happening. So it's been luck of the draw, I think, for a large part of this year.
Brilliant, thank you.
It depends which country as well.
Okay, and then Neil said, how does goods sold from online marketplaces such as eBay or Etsy impact VAT accounting?
Oh yes, that's a good point. That's a really good question, actually, because one of the things maybe I should have mentioned in relation to low value consignments, is that goods sold through online marketplaces now, again, things have changed gradually, but I think it's from July, another change that came in July, things sold through an online marketplace, the online marketplace should account for the VAT. So in most cases, there'll be like a business to business transaction between the supplier and the online marketplace, and the end sale will effectively be done by the online marketplace for VAT purposes. So that, if it will be different if you're selling through an online marketplace. So I've got clients who've got a bit of everything, really. They'll do some sales, through Amazon and the like, and they'll do some direct sales from their own website. So they've got a jewelry, some of the sales have to treat separately.
Okay, thank you.
But it is a different system that.
Okay, brilliant. So we've got six minutes left. Gain is asked. Lots of great information. Could you very simply state what's the VAT rate on selling to EU customers? That depends on what it is, I suppose.
The answer to that question is what the VAT rate is in their country. Because because it's now everything's moved. You probably noticed if people sit back and actually look at what's the effect of all of these changes, not just Brexit, but the changes that have come about this year that would have happened anyway, is that the move is now to tax transactions where the customer is based. So the answer to the question, it's a really good question. And I think increasingly now the answer depends what the VAT rate is where the customer belongs, because that's where transactions are now going to be taxed.
Okay, brilliant. Thank you. And then VAT rate on purchases from EU customers. Again,
because if you're purchasing them in the UK, then the VAT rates that apply in the UK will apply. So if you're importing it doesn't matter where you're importing from, 20% VAT rate will apply on the import VAT will always be 20%. Well, if it's subject to VAT, of course,
Okay. And then selling to and from countries outside the EU, there's been no changes to that at all. Okay, no. So the answer to 2 and 4, Gainer, is that they stay the same. Arthur's asked, do you see a lot more changes coming through?
Yes.
That's a
Probably
simple one.
in the sense, yeah. Well, the interesting thing again, I've not included it in this talk, but again, it could be a topic in its own. This is all what we've talked about is the impact on cross-border transactions typically, so the practical application. But one thing we do know about leaving the EU is that the UK now can change the VAT laws much more freely. So prior to 1st of January, we were bound, broadly speaking, by the EU VAT legislation. So the UK VAT legislation effectively mirrored the EU VAT legislation, and all EU member states have to, broadly speaking, there are a few exceptions here and there, broadly speaking, have the same rules on VAT. But now we've kept obviously the rules that have been built up over the years because they're very effective and work well. So we're not going to ditch VAT anytime soon, because people have asked me that quite a lot. When we're going to leave, does that mean VAT's going? I'm thinking, well, I hope so. I was saying, but sadly not. But we can change the revenue customers now got much more freedom to change VAT laws. Not done anything yet, and there's been a bit of pressure to change. Like for example, 5% VAT rate on domestic fuel bills. We can change that to 0 rate now if we wanted to. And there was a bit of pressure recently that you may have seen in the media to do that. Revenue customs have chosen, the government has chosen not to, even though they could do now, which they couldn't have done before while we were in the EU. But now we can, but we chose not to. So that's interesting.
Okay, thank you. We've got three minutes, so some quick fire ones if we can, Keith. Hayley
Sure.
and David have both asked if there's a good flow chart or a table that summarises all of this, and if not, Hayley's offered to help create one. Yeah,
well, it would be good to see. I've not actually seen anything like that, to be honest, as yet. There may well be one somewhere. I think when we spoke earlier, Simon, one of the points I made was that there are so many aspects to this. It's really quite difficult to try and condense it down. But it's probably a good idea to try it, actually. But yeah, sorry. The answer is no, that I'm aware of. But yeah, I'm more than happy for somebody to have a crack at that.
Brilliant, excellent, thank you. Perhaps Mark can make a note of that so we can follow that up. Hayley's asked, UK company selling digital stock photos to the EU customer. What's the VAT treatment of that? Is it covered under the digital electronic services?
It would be, yes. If it's business, it depends whether you're selling them to consumers. So whether it's a retail sale, if it's a retail sale, you'll have to register for VAT in the EU and account for VAT. The supplier will have to account for VAT. If it's selling it if it's business to business, then the EU business will self-charge the VAT. So the rules are different. Again, this is a good example. There are nuances within the rules, all of them, depending whether your customer is buying the service for business purposes or for private purposes or non-business. Excuse me.
Thank you. David's asked, and I think I might even have to write this one down to understand the question, but David's asked, triangulation business to business. A UK company sells to France, but the goods are shipped from the Czech Republic direct. Is UK invoice to customer outside the scope? Should the Czech supplier be invoicing the UK company and the Czech VAT as a UK customer as no EU VAT reg?
Yeah, that's one of those situations. Exactly the situation I was talking about. The example I gave, I think, was Germany, France, and the UK, but the same. Yeah, you can't simplify now because UK businesses cannot use that triangulation simplification to avoid having to register. So the answer to your question is, if unless they restructure it somehow, the UK business would have to register for VAT in either the Czech Republic or France in that example.
Okay, brilliant. Thank you. And I'm conscious of the time. I've got some other questions that have come through, which I'll make sure that we answer as best we can. We won't do it live, but we'll do it during the course of perhaps the next few days. Hayley's backtracked, so Hayley's put not help do it. I need help do it. I need help do it.
Right.
That was around the checklist, Keith. So I think you're on your own, mate, with that one. Again, has said if you make that flowchart, patent it and sell it. Everybody would want to.
That's a good idea.
Brilliant. So as I say, there's a few questions which I'll make sure we get answered as a part of this process. But given it's 10:30 and we've already taken a huge amount of your time, Keith, thank you very much for coming along today and for sharing your insights around VAT on Brexit. As I said, most of that stuff goes over my head now, thankfully, so I don't have to worry about it, but it's wonderful. And thank you also to all the members that have come along, and specifically to those that have asked questions. As I always say, it's the questions that you ask during the course of this process that make these conversations unique. And Keith's contact details are in the chat box. So if you've got any questions or need any advice or support from Keith, then please email him on Keith at, oh, it's just disappeared off the bottom of the screen. It's keith.miller@ecttax.co.uk, and his mobile telephone number is on there as well. So brilliant. I will let you disappear, Keith, and say thank you very much again, and I will see you all next time. Thank you. Bye-bye.
Thank you.
Bye-bye. What a session that was by Keith Miller from ETC Tax, all around the VAT implications of Brexit. As always, if you've liked this video, please hit the thumbs up button. Please subscribe to the channel so you get notified next time we upload a video, and comment with any questions below the video, and either myself or Keith will gladly answer them for you. On the screen now, somewhere around, you will see our next videos that we suggest you watch to inspire, challenge, and support you to run the best accountancy practice you can.